Welcome to Volume 5, Issue 26 of the Milestone Investing newsletter. This week's ex-dividend date is the 27th of June. Okay, what's going on this week? We have 4 candidates delivering 1.6 billion. British American Tobacco is the big one at 1.2 billion, and then we kind of got some crumbs with the others: Burberry, British Land, and Experian. Now, to call £73 million crumbs is actually quite funny, but in the scheme of things, this is crumbs on this level, in this chart anyway. So let's jump through and have a look at what we can expect. British American Tobacco is 36.5, professionals, Burberry 35.3, British Land 28.7, and Experian 21, and non-professionals 9.8, 7 and 5. Burberry, manufacturer, wholesaler of luxury goods. I'll leave you to read all the details later. They're number 58 in the FTSE with a valuation of 7 billion. How do you trade this company for its dividend in the last 7 years? 10 times out of 15, 67% of the time, you would have got any money back within a week. 5 times out of 15, 33% of the time, you would have got any money back within a month. That means 100% of the time, you got your money back within a month in the last 7 years. And the longest you had to wait was 20 days. 20 days being 3 weeks, everybody got their money back, no exceptions. And there was no time at all when you didn't get money back. So Burberry, straight away, put it on your watch list for going long. What about going short? 6 times out of 15, 40% of the time, you made money on day 1 and 2. Going short with this one. On day 1, ROI was anywhere between 5 and 58%, and on day 2, anywhere between 5 and 12%. The next best one after 58% on day 1 is 21. So if we put 58 to one side, because that's an unusual one, it's between 5 and 21. And on day 2, it's between 5 and 12. Now, we can see that it's getting less and less as time goes on because this one's recovering. So just to let you know, this one's good for going long, not for going short. Burberry, their fundamentals. What's going on here? 2.5, 2.4, that's falling, going up. 2.8, 2.7, 2.7. So what are we seeing? We're seeing down, up, down, down. So from 2017, we've got falling revenues. Now, they're relatively flat because they're all 2.7 billion. So, you know, Burberry, that's interesting. Let's look at their profits. 445 billion, 416 billion, falling, 395 billion. And then it starts to climb up again, 416, 443. If you are making less money here than the previous year and you're making more profit, this is cost control. That's what's causing that. You're spending less money relative to this, and you'll see it right here. And you'll see it in the profit margin, 14% here, climbs 15, climbs 16. And this seems to be 7, before all this stuff went here, it was 17%. Okay, Burberry is in between 14 and 17%. The ability to convert sales into profits. That's what this number means. Your ability to convert sales into profits. What can we say here? They want to pay dividends of 129 million. They got profits of 339, and they got cash of 875. All very, very comfortable for them. They have a valuation of 7.1 billion, and they got a book value of 1.5 billion. So this one is they're selling at 4.7 times their net asset value. And again, if you want to know, is that high or low, the best thing to do is compare all the years. And if you then compare them, then you'll know whether or not this number is a stable number or it's a fluctuating number. Okay. But that's their story. What else do I want to tell you about this? We're good. In the last few years, what's been going on for them? Going up, going down, in fact, really from here, 2016 onwards, mid-2016 onwards, we've been basically zigzagging upwards. And then around middle of 2018, we had a drop, bounced back up again this year, and then we had a big drop last month. last month, big drop, and then stabilizing again. Burberry. I won't go through that, but I will do this one. So this week's candidates, we can see that the best performer going short, is British American Tobacco at 63%, and Burberry at 67% for going long. So I just want to look at these two for a second. Let me pick on Burberry very quickly. Burberry is here. What we want, if we're going to go long now, what we want these to be small numbers. So 0, good. 20, problematic. 0, good. 6, that's within a week. 0, good. So the lower this number, the better it is in terms of track record for going long. We want this to be a small number. If we want to go short, we want this to be a massive number. So therefore, we're not worried about it recovering quickly. Who did we say was good for going short? We said British American Tobacco. Now, British American Tobacco is the one on the end, and we've got 11 days. Okay, that's good, but look, that's a problem right there. That's a sprint finish. Here's another sprint finish. You don't want to be going short on companies that can do this, okay, routinely. In 2018, twice they recovered quickly, and once they took their time. Here, they took their time, and again within a week. Here, that's great for going short. This is perfect for going short. You want it to take all day and be falling heavily. But this is more remote history. This is good for short, good for short, good for short, good for short. This is mixed. This is problematic. And that was last year. That would have been good for going short. 2019, 11 days. Especially if you want to be in and out by Monday. So I'm now compare second quarter. So we're in the second quarter now. So what was the previous second quarters? Well, there you go. Last year, second quarter was a sprint finish. And the 2017 second quarter was 69 days. So I have no idea what to make of this other than to say, be careful. If you want to short this one, don't short it and close the computer. Pay attention to it because it can recover quickly. And if it does want to recover quickly, you know the drill. Close the trade. Hi, this is Miles from Milestone Investing, and I just want to give you a quick progress report on the Burberry Group. The Burberry Group were paying a dividend of 31.5p. If you bought the shares, that would be equivalent to 1.8%. If you use a derivative, professionals got an enhanced return of 35.3%, and the non-professionals got an enhanced return of 8.8%. This is Wednesday, the day before ex-dividend date. When it went ex-dividend, it dropped down and it went to the drop zone. And the drop zone is really marked out by two factors. One being dividend adjustment, and the second one being a technical adjustment called the milestone adjustment. And what he did, he actually dropped to the dividend adjustment, found support there, and then essentially started to rise up on Thursday morning. It then went sideways, and then really just inched its way up further and further. And then on Friday morning, it gapped up and it went way above the green line. The green line is the highest point on the Wednesday. This means that everybody who went long and picked up a dividend received that dividend, qualified for it here on Thursday, and got their initial investment back by Friday. So for professionals, that means they made a 35.3% return and more, because of premium, and more within 2 days. Trading day, 1 day, 2 days. And by the second day, 2 days, they've obviously got their dividend, they got their money back, and they've got a premium on top. So minimum 35% for professionals, 8.8 for non-professionals, and if you bought the shares, you got 1.8% within 2 days. This is Burberry Group, and this is Miles from Milestone Investing. Happy investing.